Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Thursday, November 4th. Great to have you with us. I'm your host, Jesse Allen. Thank you so much for making us part of your day here today as we near the end of the first week of November. MarketTalkAg.com. That's our home on the web. That's where you can find us, MarketTalkAg.com. Well, what started out as an okay day in the markets quickly turned into a heavy risk-off day. We saw grains plummet lower, led by soybeans and spring wheat. And we got plenty to talk about. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here today. Bryan, good afternoon to you, sir. And man, what a turnaround it was there about mid-morning, and just a rough risk-off day in these markets today.
Yeah, for sure, Jess. It was, and it was a little disappointed, kind of a spit in the eye for soybeans because the weekly export sales number at 68.5 million was probably a little heavier than people were expecting. We didn't see a lot of big daily announcements. That is, if there's more than 100,000 metric tons that's announced on that day, and then added into the weekly report. So this is through last week, and we knew there were some good sales in the books, but nonetheless, third day in a row here where the markets had a good run up on Tuesday morning and kind of peaked, and some contracts put in reversals. And a day like today's kind of tough because I think the market it's moved down enough from its recent highs that traders, farmers, whoever put stops or trigger points underneath the market saying, look, if it gets any weaker, I got to sell something. I either got to sell my futures contract, or I think it's going to go down more, I'll sell into the futures, or I'm going to sell some cash grain. I will say this. I think early in the week, as I talked to producers, they were, for the first time in several weeks, despite higher prices the last couple of weeks, they were, to my feel of it, selling. They were selling some a little, some a lot, but it was a terrific price, best price in corn seen since July 2nd earlier this week. So kind of chew on that. That's definitely a post-harvest recovery.
Well, you mentioned that farmers selling maybe picked up, and then also we got a WASD report coming up on Tuesday, and one has to wonder if maybe some of this sell-off could be attributed to that. Maybe us, kind of backing off and squaring, well, not a little, more like a lot ahead of that report next Tuesday.
I think you might have hit the nail on the head, at least one of the nail heads of why we are where we are, and that is you do have a report coming out. And so you got a couple of things happening there. You've got expectations that the USDA could very easily add a little bit of yield. The numbers that we heard from producers over the last 3, 4 weeks of harvest were generally better than they thought. Beans just did well. The August rain seemed really helpful. Corn yields, I'm going to say the same thing. So you've got a USDA report that could likely keep yield the same or increase it. In soybeans, export sales year to date 1.187 billion. That's a big number, but last year at this time was 1.779 billion. So well behind, and we lost some time during the Gulf crisis due to Hurricane Ida. So there's all this kind of growing consternation that, look, China is buying hand to mouth. They're the biggest shopper, of course. They're looking at cheaper Brazilian beans. The Brazilian farmers rushed to get crop into the ground earlier this year to try and get beans out earlier for one, sales to China if possible, and two, double crop it to corn. So along the way, we get some twists and turns with fertilizer this and fertilizer that, and that's another thing that's perceptive of corn. As I talk to farmers and they're talking to their vendors, they're saying, there's some potential reality to this high fertilizer price sticking around or the availability of it being an issue. I think that too may have had some impact on beans. Maybe today, but probably a little bit more so early in the week when November of next year just you tried to rally and couldn't get through 1250. Just can't do it. Just like a big brick wall in front of it.
I'll be very interested to see what Friday looks like if we have another down day or maybe we just level off and kind of hold steady into the weekend. I'll be very curious. I think if we have a steady day, that would probably be more likely and more welcome than another big up day. But it's always hard to say. Just the way these markets trade nowadays, we think about it. A move like today has become pretty commonplace, Brian.
Well, it has. I mean, it's big today because we haven't seen quite that many big moves, but and I don't know how to quantify it. I could go back and take a look, but we've had plenty of days this year where a trading range is much greater than 15 cents, sometimes 40, 50 cents. So when we look at a day like today in beans, it's disappointing. Soybean oil had a big down too. Energy prices just can't seem to break the mid 80s, and all of a sudden flipped over this week, and you got crude oil down as I'm looking at dollar 80 at just over 79, and it wasn't too long ago that was at 85. But what I think the trade might be concerned a bit, it's not where crude oil is at price, is hasn't lost its upward momentum and is a top in place. 2 weeks ago, was all this talk on the way up that crude oil is going to run to 100. You talk bioenergy, biofuel. You got all this global climate change conferences and meetings, and all of these supposedly things that help move right along. The reality of it is things are probably not going to move right along, and China and Russia didn't even bother to show up. So, um, and they're the biggest violators. So we can all move forward, but um, it may have lost a little. I think it lost a little bit of shine this week.
I know as well, spring wheat today was a big move to the downside. I think we're somewhat 50, 60 cents off the high from earlier the week now, I believe, in that December contract, Brian. I don't know exactly, but I know it's down there. In Chicago KC wheat today, fairly moderate losses. At least, we didn't see those two complexes accelerate more to the downside either.
Yeah, and they've really had a good run here. So to expect things to just continue unabated. You could have a big correction in these markets and they'd still be bullish. They'd still look bullish. But to your point, December Minneapolis wheat 1017 today, down 27 on the day. Peaked here 2 sessions ago at 1086 and a half. So yeah, all of a sudden you look up and we go from 1086 and a half. Basically, if we go 1016, what's that? 60, 70 cents?
Hmm.
Just that quick. But that's what happens when you get this high. Those kind of ranges are anticipated. And maybe the disappointing part about today is that the wheat contracts finish near the low price of the day. So we're talking about bigger ranges, but who cares if the market finishes close to steady or a little higher, a little lower? Today was kind of a tough day in the spring wheat contracts in particular.
I am encouraged by the corn market at least, and I know we talked about it, and we have talked about the rising input costs and fertilizer, et cetera. And even with big down days we've had this week, corn has done relatively okay. I mean, you look today, 4 3/4 lower on December, 559 and a quarter. I mean, we've really been able to hold our own. And I think it's because corn has a stronger story, Brian.
We think corn has a stronger story because it didn't get quite the benefit of rain that beans got, and then you're talking about this whole fertilizer, let's call it situation that it just points to less corn acres, all else being equal. Now, not every farmer's going to switch, but when you look at 2, 3, 4 million acres, you're looking at 2, 3, 4, 5, 6, 7%. Put it in that terms, what's a million acre? What's 2 million? Well, put in percent of the chain. So if we lost 3% of, let's just say 3% of corn acres, and let's use round numbers of 90 million, that's 2.7 million, something like that. So um, in that range. So that's to be expected. But 2.7, if we lose that in corn, let's just round it to 3 at 100, if we're conservative, 150 bushels an acre, that's
Mhm.
450 million bushels. So unless we, really do something different, that carryout number is going to shrink. And that's why corn has probably the best numbers, is this idea of losing some acres, feed demand staying the same, exports probably staying the same, 2.5 on those. or maybe a minor downward adjust. Maybe I'm not in that camp yet. To corn, and then a bump up of maybe 1 to 200 million in ethanol. All of a sudden, you got a carryout number that's maybe south of 1 billion, maybe south of 800 million. That's why I think the corn market is probably pretty supported today, and why farmers will be fairly reluctant sellers on price setbacks for some time to come.
Brian, let's switch over to livestock. Good news today. Hogs were higher. We
Yeah.
saw some good triple digit moves higher in hogs. Strong export sales report for the week. Mexico, China, the top buyers there.
Yep.
Talk about what you saw with hogs. Was it really all attributed to the weekly export sales, or are we finding a bottom in this market finally?
You got a double bottom on the charts, but you still need to feed the bull. So you need something for the bull to get excited about, and that's been a little bit tougher to come by in livestock lately. And it's really not this idea of we've got so much supply. It's this idea that you kind of got, I don't know how else to put it, but you kind of got this tube in the middle. You got the producer, cow calf, you got hog producer, the producer of livestock, and in the middle you got the packing plants, and then out of this end you've got all your consumer interests. And as the product moves into the pipeline, I read one article this morning, Jess, that on any given day, 20% of the labor force doesn't show up at packing plants, and you had the social distancing and spacing and all of this. So it really still boils down to there just hasn't been enough, or there isn't enough packer capacity with reduced either hours or spacing, or just a poor labor market. Poor as in can't get enough help. Um, so we like to think that there's good potential, but these other variables are a hindrance right now, and it's a complicated sort of picture we're in. Ultimately, with if things were to improve, let's say in the COVID front, and packing plants can run 24/7, and they can get the product into the hands of consumers. The market's well supported for that.
Let's look at cattle, and I know cattle were down today after a good up day yesterday. It's a standoff in feedlot country right now. It just feels like we got the bids out there, but we're just not meeting those asking prices quite yet here this week. And a 130 in the south, 205, 206 in the north. Some of the numbers that are out there, and yeah, just looking at this cattle market, you look at what's going on in cash country. You look at how that translated today to the lower futures numbers. What do you make of this week's cattle story?
Um, and talk about kind of a turbulent week. If you look, the low for the week on futures was Monday, so it
Mhm.
looked the board looked kind of sour on Monday, but technicians held the 10-day moving average, and we bounced it off of that. Um, I think from a macro picture, I keep going back to this. If we're pulling out of this pandemic, and which is kind of a side note for myself, I think if we're down to, this is Bryan Doherty's disclaimer, so my opinion, but if we're vaccinating 6-year-olds, uh, we got to be getting somewhere deep on that curve somewhere where we should be ahead of this, and the numbers should be coming down. At least I want to believe that. That's where your demand market. You've got your holidays coming up. You've got people that have been pent up. Savings last year during COVID, all-time highs. People have money who've been employed, have money to spend. If you weren't employed and you're collecting some of these resources of dollars, probably have money to spend this year at holiday and elsewhere. So I want to think people are going to eat well. Probably the thing that turns people off most, though, is you go into a restaurant, you can't get anybody to serve you. That's the truth. That's the problem, and people get tired of that. And we've had personal experiences where you just finally say, "Well, we'll just we'll just grab a steak in the store and go home." Um, but that's the industry's problem. But I think the demand is there. I think the supply of cattle that's going to get a little tighter in this venue, and that is it was a great fall for weight gain. We're entering kind of the worst time of year for weight gain when you start getting these temperature fluctuations and potential muddy feedlots. Your 6 to 10 day forecast got the entire nation basically above normal precipitation next week. So you're going to start getting sloppy, wet feedlots and probably reduce your weight gain.
Well, Brian, catch us up on the dairy market here today as well before we run out of time. What are you seeing over in dairy right now?
A lot of volatility. We saw the world dairy trade show us some nice improvements. Again, looks like world demand's trying to pick up. The big wild card is China, where they're cracking down on COVID. There's zero tolerance. But we did pick up some ground today on the deferred months, mixed on the front months. But volatile is the market there. Yeah, you look at this November contract, and this is why producers want to really stay. Two things to say quickly is they want to pay attention to the marketplace, and then two, get orders in the cell, get your wish orders in the cell. Sometimes the wishes happen. November milk went from $17 to $20, or 19.99 was the high, and we were at $17 from the 16.79 on the 23rd of September, and let's just call it $20 by the 21st of October. That fast, straight up. And then it's taken it back. Now we're back under $18. So it'll be volatile. A lot of that was short covering, speculative buy, money flow, China sniffing around in the market, uh, powdered milk, all these things that make the components up to the milk market. But it has pulled back. It's going to be choppy, but we think that producers, even though they may reduce the herd a little bit this year, are probably going to stay at it. This run up in milk gave them another incentive to believe that there's another rally around the corner, because there was one around this corner, and opportunity to sell in and lock into higher prices. And that's I didn't mean to be long-winded, but the milk market's very volatile. 18 and a half, $19 deferred milk contracts. If you're a dairy producer out there, you know, let's talk about that. That's value that can disappear really fast.
Great stuff as always, Brian. Any final thoughts you have for us today? Anything you want to reiterate?
Well, I think I'll reiterate just how fast the market's kind of moved up here. Corn had nearly an 80-cent rally. All of a sudden, it takes some back. Look at beans; they've jumped up here. Kind of hard to wonder why, or fathom why are they rallying when they look so weak, and now they've turned around and look weak again. So now you wonder why. Yeah, why did they rally if they're going to look weak? Well, that's just kind of the nature of the market. And the higher you get in price, the more volatility you get. So again, don't be afraid to put some orders out there that if you don't think can get hit, sometimes they do. So I'd leave it with that. I'd leave it with, hey, a couple of things. They're finishing up harvest. Still keep it safe. Looking ahead. Great opportunities. We just got to find that nugget, and make sure we capitalize on it. But the markets have provided opportunities the last 6 weeks to do some really good things with old crop, new crop, dairy, and even cattle. Cattle before they kind of tipped over, and then they bounced back here. So good opportunities. Keep your eyes peeled.
Well, Brian, if producers need some help with these opportunities that are out there, and I know they can reach out to you and the team there at Total Farm Marketing, and really, that all starts with a phone call, doesn't it?
Yeah, we prefer the phone call. It does start with that. We're still a little bit old school in that, building relationships, talking to people. All of it starts with conversation. So let's just have conversation, and let's kind of figure it out, or see if we can figure it out. Our job is to be in the trench and kind of put this all together. And whether you go to a doctor, you ask him a bunch of questions, or he'll ask you questions. I mean, about your health, or whoever, your attorney or your crop consultant. eh, They ask you questions. We'll ask you questions, and then try and help, listen to what your answers are, and see what we can do to put some value into that conversation.
We'll give them a phone call, 800-334-9779, or visit them online, totalfarmmarketing.com as well. Brian, appreciate the time as always. Have a great rest of your week and weekend, sir. We'll talk to you next week.
All right. That sounds great, Jesse. Thank you. My pleasure.
Bryan Doherty with Total Farm Marketing, our guest today on Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.